Okay, so get this. There's this idea that a financial time bomb was set in motion 400 years ago, and that we're living in the final seconds of its countdown. Seriously. This is the story of how one signature, way back in 1602, lit a fuse that's been burning ever since. And it's leading us, right now, to the brink of a potential global collapse. So, let's trace that fuse all the way back to where it started. To do that, we have to go back, way back. We're not talking Wall Street or London. Picture this. Amsterdam, 1602. You've got these damp canals, the bustling heart of a new world. And a group of merchants get together with a huge problem. How in the world do you pay for these incredibly dangerous, incredibly expensive voyages to Asia? Well, the solution they came up with, it would literally change everything. And that really is the core question here, isn't it? How could one signature on a single piece of parchment start a 400-year countdown to a crisis that could threaten our financial system today? It sounds crazy. To figure it out, we've got to look at exactly what they invented. Because what they created, honestly, it was a beast. A completely new kind of financial monster, born right there in the alchemy of Amsterdam. See, before this moment, wealth was something you could touch. It was gold, it was land, it was spices. If your ship sank, poof, your wealth was at the bottom of the ocean, gone. But these guys, they invented something totally different. They created the Dutch East India Company, the VOC. Now, its real genius, the true innovation, wasn't just about spice trading. It was about paper. For the very first time, an ordinary person could buy a tiny piece of the company, what we call a share. And here's the kicker. You could sell that piece to someone else anytime. This created permanent capital, liquid markets. Suddenly, money never had to sit still. It could just flow. And the power this unleashed, it was absolutely staggering. I mean, at its peak, the VOC was valued at the equivalent of, wait for it, $7.9 trillion in today's money. Trillion. This thing had its own armies. It minted its own coins. It declared wars. This wasn't just some company. It was basically a sovereign nation with a stock ticker. Just to put that number into perspective for you, the VOC was worth more than Apple, Microsoft, and Amazon combined. Let that sink in. The sheer scale of this new kind of corporate capitalism was something the world had never, ever seen before. But of course, with this powerful new creation came its dark side, its evil twin, pure, rampant speculation. And well, it didn't take long for the system's fatal flaw to rear its ugly head. We're talking just 35 years after the VOC was founded, and the Netherlands gets absolutely gripped by Tulip Mania. This was the first giant red flag, the first warning sign that this new world of finance was, let's just say, dangerously unstable. The madness got completely out of hand. I mean, we're talking about normal, level-headed people trading their actual houses, their family farms for a single tulip bulb. And a lot of the time, it was a bulb that hadn't even sprouted yet. The promise of future riches had totally disconnected from any kind of reality. So what was driving all this? Well, it was a new invention they called winhandel, which literally translates to win trade. And that's exactly what it was. It was basically the world's first futures market. You had people trading contracts for tulips they didn't own with money they didn't have. It was leverage in its earliest form. And man, did it fuel one massive bubble. Then, in February 1637, the whole thing came crashing down. And the lesson was brutal. All those people who traded away their real, tangible wealth, their homes, their land, they were left holding nothing but worthless pieces of paper. It was the first time the world learned a very painful lesson, that this new kind of paper wealth can disappear into thin air just as fast as it appears. Okay, so let's fast forward 400 years to today. The smoky taverns of Amsterdam, they've been replaced by humming, high-frequency trading servers. But the fundamental game, it hasn't really changed at all. In fact, you could argue it's become even more rigged. There's this dirty little secret that connects the old VOC aristocrats to today's financial elite. It's called the Cantillon Effect, and the idea is actually pretty simple. When new money gets printed, it doesn't spread out evenly like butter on toast. Nope, it flows to the people closest to the money printer first, the friends of the king, so to speak. And today, that means the big banks and the major financial institutions. And here's how it works in practice. It's almost deceptively simple. Step 1, new money is created. Step 2, it goes straight to the big players. Step 3, They use that fresh cash to buy up assets, stocks, real estate, you name it, which pushes all those prices way up. And by the time any of that money finally trickles down to the average person's paycheck, its buying power has already been eaten away by the inflation that the printing caused in the first place. It's a system that, by its very design, funnels wealth to the top. Okay, so this is where we get to the nightmare scenario. Because this entire global system, this thing we've built up over 400 years, it's like a giant inverted pyramid. And it's balancing on a single, incredibly fragile point. And that fragile point, it's called the repo market. Now, the easiest way to think about it is like a giant 24/7 pawn shop for the entire global banking system. We're talking trillions of dollars changing hands every single night just to keep the lights on. And the only thing that keeps it all from falling apart is the absolute belief that the collateral being used, which is U.S. government debt, is as good as gold. But what happens if that belief suddenly shatters? What if global creditors just start saying, nope, we don't trust this U.S. debt as collateral anymore? Well, the repo market would freeze instantly. And that means no more overnight cash for the banks. ATMs could run dry in days. Global supply chains would grind to a halt. And that $1 quadrillion derivatives market, all those contracts backed by that same collateral, it could just implode. We're not talking about a recession here. This would be like a sudden, fatal heart attack for the entire global economy. So here's the kicker. While most of us are caught up in the day-to-day headlines, the so-called smart money is, according to some, already quietly heading for the fire exits. They're reportedly executing a plan that's being called the Great Hedge. So what does this escape plan look like? Well, you've got central banks buying up physical gold at the fastest rate we've seen in over 50 years. You have billionaires quietly buying up real assets. We're talking farmland, energy sources, things you can actually touch. And, it's probably no coincidence that something like Bitcoin emerged right after the 2008 crisis, specifically designed as a mathematical, digital answer to a system based on printing endless amounts of money. The pattern is clear. They're all trading their paper for real-world stuff. So the big question is, when does the clock finally run out? Well, according to some analysts who are crunching the numbers, the math points to a perfect storm converging in a very specific danger window, sometime between 2027 and 2032. That's when the insolvency of Western Social Security and pension systems is predicted to slam right into peak interest payments on all this government debt. That's the 5-year window they're watching for a potential sudden, catastrophic collapse of confidence. And so, here we are. This incredible story that started with a simple charter in Amsterdam seems to be reaching its final, dramatic chapter. The Tulip bubble, that was a local tragedy. This time, the theory goes, the crash would be global. Which leaves us with one final, really provocative question. The 400-year clock is ticking. So which side of that great hedge will you be on when it finally hits zero?